Good afternoon, ladies and gentlemen. Following the fireside chat, I think we had an excellent introduction to this panel, and I'm very happy to moderate the last panel of this FESE conference, which will be dedicated to discuss how to unlock IPOs in Europe. I'm pleased to be joined by an excellent group of speakers, and I would like to introduce them right now. So next to me in the room, we have André Kovarik, member of the European Parliament from the Econ Committee. So we are home to your constituency. I'm very happy to be here in Prague. We also have Álvaro Castro, head of equity primary markets from SIX Group, BME. And also we have with us Vladimir Jarosz, CEO of Good & Company. And I want to especially thank Vladimir for being here with us today, because this has been a last-minute change in the program, because unfortunately our initial speaker from your company, your colleague Jan Sikora, unfortunately is in COVID isolation today. So we're very happy that Vladimir could really come that quickly. And then from the screen, joining us on remote, we have Tanya Panova, head of unit at the Capital Markets Union in DG FISMA from the European Commission. And also we have with us Adam Kostial, Senior Vice President, Head of European Listings at NASDAQ. So before starting the debate, I would like to make a few introductions, even though, as I said, we had an excellent intro with the fireside chat. But we heard precisely that we need to trigger more demand from companies and investors to enter the market. And I want to begin with saying that EU companies are not yet making the most of the funding potential that our capital markets could offer. In fact, we recently heard and we saw a joint statement from the heads of the French and German central banks that were stressing the need for the completion of the capital markets union. The digital and the sustainable green transformation of our economies, which are just now is a reality, will have to be financed by capital markets. So we absolutely need to get ready, and as we call it, we need to grow the pie. The reality, in contrast, shows that EU's capital markets are not growing enough when we look at the indicators such as market capitalization, number of listed companies, venture capital funding. So this is something that is a little bit worrying and does not really show a rosy picture of our reality. And in fact, if we look at some CMU KPIs, just to really measure this reality, the slow progress in our competitiveness is reflected in the declining proportion of our global equity market capitalization of listed shares. And in fact, if I quote a few numbers, we can see that, in fact, Rainer also mentioned that. I'm going to repeat just the figure, but I think in the last 20 years, we've gone from 18% to half, almost 10% of global market cap in listed companies. And of course, this reality is due to several components. It will be easier if we just had one reason for that. There is obviously the ongoing trend of company delisting. It was mentioned several times, the reality of Linde from the DAX now going into NYSE, but also we have the reality of fewer IPOs coming into our markets. And in fact, their numbers are quite worrying. If I quote the statistics, from the period 2000 to 2006, we had about 370 annual average of IPOs coming, while we are just only expecting about 100 in this year, 2022. On top, I don't want to sound too negative, but on top we do have capital markets, as discussed earlier, that remain too fragmented, that are too costly, and still too small to really properly support an economy of our size. But okay, we need to kind of look positively on what to do, and we also need to kind of set vision on what are the goals of where we want to go. And one of the things that at FESE we have been advocating is to set the bar high when it comes to market capitalization in terms of percentage of the union's GDP. And we were calling to reach the 100%. We heard earlier in the previous panel that we are quite below that number, but definitely this is not unachievable, and we all call to try to reach that objective. Okay, so just now to conclude my intro, I think there is no choice but to support public markets and improve this IPO environment and ecosystem for all the companies. So I would like to discuss with our distinguished panelists how to do it better, and in particular I would like to structure the discussion in somehow 3 blocks. First, to look at what are the current trends of this SME equity funding. Then obviously we need to look at the obstacles, the difficulties that we are facing, probably also learning from others that are doing better, and to end up with what are the solutions. And obviously we have the awaited Listing Act legislative proposal, which is coming in a week time, if everything goes well. And obviously that will be a very good wrap-up for our panel. So if I start then looking at the current trends, I would like first to give the floor to Tania Panova. Tania has been leading the CMU unit already for a number of years. She has been driving the work, and I know, and I need to also say publicly, the intellectual investment that she and her team have put into that. They did this CMU high-level forum that ended up, after all, with a CMU action plan and really put some measures there. So I would like, Tania, if you could give us an overview of the objectives and plan actions that you have in this action plan, just a bit of an overview on where do we stand, what still needs to be completed, and also with a special look at SMEs.
Thank you very much, Rosa. I hope you can hear me.
Yes, we do.
There is a bit of an echo, but I hope that's manageable. So maybe I can start on a positive note, a slightly more positive, and maybe a bit contradict what you said, Rosa, in your introductory remarks. So you've painted a fairly bleak picture for this year, and you're absolutely right. This year is a difficult year for many reasons, and many of these reasons are outside our control and the control of stakeholders. What we have today is, probably something that we didn't expect that we would be having when we first were embarking on the CMU action plan back in 2019 with the HLR forum. And if we actually look at the last year's numbers, including last year's numbers on initial public offerings, I think the year was actually quite good, and we were all quite happy also in the post-COVID situation, seeing such a good recovery for the markets and number of companies coming to public markets. So I perhaps wouldn't be as negative as you were in describing the current situation, because the current situation is driven by many factors, and most of those factors are political or ramifications of political decisions or political developments. Now, where do we stand on the CMU action plan? And thank you very much for the praise. We are looking potentially at 2/3 or even 4/5 of the measures being completed at the EU side, and that is counting the upcoming new CMU package of measures that you've anticipated or pre-announced, that is likely to come in a week time or so, where we will put forward 3 packages of measures focusing on corporate insolvency, listing rules, and rules for clearing. But I will get to that point in a second. So among the measures that we have already tabled, and I would like to emphasize that, of course, here is the focus is on the emphasis is on tabled, because the work doesn't stop there, and the progress of many of those files has been rather different, if I may say so, in Council and Parliament, and I'll get to that point in a second as well. So among the measures that we have tabled, where the Commission tabled a legislative proposal, the majority of the measures are in the area of access to finance. To name a few, and I think the previous speakers did mention the ASEP proposal, so the single access point. There's been an ALTIF proposal looking more at the vehicles for investing in SMEs. There have been also elements that we've taken on board in the CRD review, Solvency II review, as well as some other non-legislative measures that we have been working on. Progress on the second pillar of plan, which largely focused on retail investor participation, where the objective of the CMU action plan was to put forward measures to ensure to underpin a safe environment for retail investors to save and invest in the EU. There, we're currently working on what we call a future retail investment strategy that will come next year, and where most of the measures focus on rather non-legislative actions that we've taken so far, notably in the area of pensions for many reasons. Also, part of those reasons are the lack of competence for the EU, but also financial literacy. So the objective that we are pursuing there is really to bring retail investors to the markets, to nudge them into investing, but a lot of those measures so far proposed are of non-legislative nature. And finally, the last pillar, the last objective of measures focuses on market integration. And there we will be tabling a proposal on corporate insolvency law in a week's time. And hopefully there will be another proposal tackling one of the key cross-border investment barriers, such as withholding tax. So all in all, I think in terms of the Commission delivery, we're almost there, also counting the measures that will be adopted next year. I therefore do not have any worries on that front. Where I do worry is, however, how the co-legislators will take those proposals forward, and whether we will have an agreement, a political agreement, on all of the proposals in due time, i.e., before the change of the Parliament, before the new legislature, to ensure that those actions can be enacted as quickly as possible. And there I would call on, and I know we have been working very closely with Andre, and his contribution into the ALTIF agreement is noteworthy. So I would like to thank him for reaching a quick agreement on ALTIFs. But a lot more work is necessary, and we're still lacking the Parliament's position on a number of essential key files, including MiFIR review and ASEP, where I think we don't have yet the Parliament's negotiating position.
Thank you very much, Tanya. No, and indeed, this is a collaboration. I mean, this is not just the Commission, as you said, putting a good number of legislative proposals forward, but is also negotiating them, and as well as market participants buying into them. No, and this is something that has always been said by some of the policymakers about the Capital Markets Union. So now, turning to André, a member of European Parliament, you have been alluded, right, as a co-legislator. We do have an EU open strategic autonomy in plan. We also obviously have the idea, the project to develop an equity culture in Europe. And concretely, already before COVID time, Econ set up a working group on access to finance for SMEs. This is something that also Tanya referred to. So, André, could you please elaborate a little bit on the work that this Access to Finance Task Force has been doing so far, and what is your perspective into the Capital Markets Union Action Plan as Tanya was outlining?
Thank you very much. Thank you, Rosa, and thank you for the invitation. It's actually a great honor to be able to speak to you in Prague. And I think a lot of things were said here. First of all, just to sort of come back to what Tanya has just said, and obviously a big thanks for the cooperation that we're having with the European Commission. with the, let's say, the first generation of the CMU action or CMU initiative, we sort of seen that there was definitely not achieved what we expected. And I think with the idea of establishing high-level group, really, you know, putting together the action plan and going with concrete actions forward, I think that actually made the difference and helped things to move forward. I think if you ask me from the European Parliament's perspective on the support on CMU, in general, if you ask members of the European Parliament whether they support it, in general they would say yes. Yeah, but I think that's the only consensus that we have. Then I think the many differences come when we discuss the concrete proposals and the positions towards them. And I think that's one thing. And the other thing, and I just realized that when we were discussing the current environment, I think we also have to be cautious about sort of a consistency or policy coherence that we have on the European level. Because in terms of, for instance, the CMU action plan and the related activities, there is a very good consistency. But if we look beyond that, for instance, the question of listing or not listing in the European Union, we're currently discussing quite tough reporting measures in terms of due diligence, in terms of sustainability reporting. I think very good proposals, but very often you hear, oh, it's okay, you know, it's only for listed companies. And then, you know, then the argument is, okay, so then it's only for listed companies and it's fine. But actually, then these requirements can be quite burdensome for those listed companies. So I think we have to look into the complexity of the regulatory framework that we are putting forward. And even if we have very good intentions, that we have to have a sort of a very good impact assessment to see whether we are not actually causing some other problems or some harm, and I think we will have the same, possibly the same situation. Tanya mentioned the current discussion on the capital requirements regulation. Obviously, we will have to implement the Basel III rules, which will make lives of banks a bit harder. Again, is it for good in terms of access to finance for companies? You know, for bank finance, it's hard to say. Maybe it can actually, again, create some problems. And hence, I think the more importance given to the idea of developing through a capital markets union in Europe. You mentioned the working group. We have established that particular informal working group under the Econ Committee, so the Economic and Monetary Affairs Committee of the European Parliament. It was initiated by our political group, by my colleagues, myself. I'm actually chairing that group, and the idea was actually to highlight the specific issue of access to finance, because we discuss the SME agenda and in the broader how to establish, you know, working business environment in Europe horizontally, but very often we end up in one specific problem, and that is actually lack of access to finance. So we can have, you know, very good initiatives in other areas, but you know, if the financing is actually lacking, then we may have troubles going forward. And the idea was to create a platform where you know, we had actually Tanya and her team taking part in the exchanges, just to give more time and space for the members of the parliament to discuss with stakeholders, but also with other institutions. With we often organize exchanges with presidencies to give also or to get some insights from the council, and have this as an informal platform for exchange of views on some specific points closely related to access to finance for SMEs. And I think we had some good presentations also from the Commission on the upcoming proposals. We are definitely looking forward to them. But as Tanya mentioned, we may have issues in terms of, you know, moving quickly enough. I think there is a number of colleagues who have this sense of urgency to deliver on those proposals. But as we see, for instance, for the specific case of the MiFIR revision, it takes quite time. The same, I'm working on one of the opinions on the single access point. We are discussing details, which I think are not very relevant in terms of data quality and et cetera, et cetera. I think, you know, we should really be moving forward. And I think that's also, in my view, fully valid for the upcoming proposals, especially those that will be published before the end of this year, because I think there is still enough time to deliver in terms of positions, both from the Parliament and for the Council. But I'm myself looking forward to, especially next year, for the retail investment strategy, because I think this, in my view, is one part that is definitely missing, and we need to have a clear strategy on the European level on this specific point. And I think there will be a lot of interest also on this particular proposal from the European Commission. So we are very much looking forward to the discussions, not only among the institutions but also with stakeholders, because I think that can be a critical point on the CMU agenda before the end of this mandate.
Absolutely. Thank you very much, André, for all these thoughtful remarks, because as you said, no, in terms of coherence, is not only the listed versus not listed, as you said, is the retail link to the CMU. In fact, earlier, Rainer mentioned this 10 trillion euros that, you know, households have in deposits. This needs to be really supplied into the markets, but also is this reality that indeed the banking sector might be struggling a little bit in the sense of, you know, all these capital requirements that they will have to now follow, which really opens more the opportunity for capital markets. So now I would like to turn to market practitioners, and they can explain to us, hopefully from a business perspective, how things are looking into this SME equity funding. So, Álvaro, what is your experience on this trend in equity funding, in particular on SMEs? I'm more interested now. Obviously looking at Spain, because you are really running the Spanish market. So what can you tell us about that?
Okay, thank you very much and good afternoon. Thank you very much for giving us the opportunity to be here with you and discuss about this. Well, the global trend, you said it before in your introduction, the global trend, long-term trend in the last 10 to 15 years is clearly decreasing, not only in SMEs, but also in main markets. For example, in the Spanish main market last year, we had only 3 IPOs. Although, if we have a look at 2021 and 2022, those were really, 2021 wasn't that bad. I mean, 2021, there was an optimism current in the markets, the post-pandemic optimism, the entrepreneurs and everyone, the economic was getting good. So it was a really, if we think about private equity markets, it was a record year with private equity, with venture capital, and with business angels investments. In a record year, no? So it was really good year for private equity. And as I said, in public equity and in BME in Spain, we had in 2021 3 IPOs of big companies in the main market. So that is good news coming from we were coming, no? So that was good news. But if we focus on SME, on our SME growth market, which is BME growth. We weren't very creative in the name. It's a BME growth market. It was especially a good year, 2021. We had 16 IPOs, so that's a good number. And these 16 companies could manage to raise more than 1,000 million euros. So that was a great number. Not only these 16 new companies, but also the companies already listed. So it was approximately 1,000 million euros raised by these SMEs listed in our growth market. And then 2022, well, there were some measures that already were anticipating that something was going to happen in 2022, not the war, but other things, economically speaking. Then the problems in the global supply chain, the raising in energy prices, and then inflationary pressure, and then monetary restrictive monetary measures and capital, interest raising. So it was really a big problem in 2022, and all this became or produced that all that trend of new IPOs was suddenly or sharply stopped. No, so That was in the main market, in our main market. In 2022, we've just had in Spain one IPO in the main market, but surprisingly, in our SME growth market, things are quite good. I mean, we have already had 11 new companies, new IPOs in our BME growth market, and we are expecting to have 5 more before the year end, because they are concluding their process of incorporation and whatever. So we are going to reach again 16 new companies in our SME growth market. It's the same number as in 2021. So the trend is the same, is increasing. The number of companies that are evaluating incorporating into our SME growth market as a way to finance their growth. No, so I think this is a result of the Capital Markets Union Action Plan. It's giving some fruit. It's bearing some fruit. Companies are more and more interested, or SMEs are more and more interested in going public, and we hope, or I guess, is a quite a best moment for giving a new impulse to this CMU action plan. So, well, this is the trend, and we hope for the next year the trend continues and more SMEs are coming. No?
Well, that's very, very good to hear, Alvaro, I must say, and it's very encouraging to see that despite the circumstances, etc., the trend seems to be kind of going up, and indeed we had an extraordinary 2021 year, but I think we should not measure only that. I mean, I was, my introduction referring more to the global trends in the last decades. But it's good to hear that the growth markets are kind of now taking off a bit. Because one thing that is very important is that a well-functioning IPO market is also critical in the pre-IPO environment, because that impacts on the exit strategies and therefore the provision of risk capital by venture capital firms. So now I would like to turn to Vladimir, because you have contributed to shape the markets in the CE region through your company. So any reflections on what has been discussed so far, and what is your opinion about this topic on equity financing?
Wood & Company represents, for the last 30 years, this region. So we happen to have headquarters in Prague, where we trade across the all markets in Central Eastern Europe, but also the emerging and frontier markets. So we go as far as Baltics and former Yugoslavia and Greece and Turkey and the satellite Russian countries. Just done an ABB for a Georgian bank last week. So we try to sort of race. We all do go for this fragmented, neglected, smaller markets. in Prague, where we are, that's our home. We are of course a little bit deeper. So we go even down to SMEs but in other markets we operate in this sort of mid-cap sector, let's say. Large caps are disappearing to the US. That's happening for all, whether it's Western, Eastern Europe, frontier, whatever. Whoever breaches a couple of billions tries to go. They're escaping Europe and they're running away from us. Mid-sized companies, from capital markets perspective, they tend to be listed in Europe occasionally. They have a clientele, and that's our main sort of, let's say, bread and butter for our business. And then we have these small cap or SMEs from the European regulatory, whatever, which the stock exchanges created various smaller market segments, including Prague Stock Exchange. Peter's created this this beautiful start program where we sort of listed a couple of companies, and we're going like we're a smaller economy than Spain, where we're following the same food path, and last year we raised the first SPAC for this region and listed it on the Prague Stock Exchange, and we're in the process of finding the right targets to promote and pre-raised. It's a slightly different way than private equity funding. So we pre-raised capital and offered that the SPAC to whoever is the entrepreneur who wants to be merged and go for, let's say, public market without giving away control to private equity or strategic, but wants to just to take the cash and deal with the public markets investors. And that's our hope, that we will sooner or later sort of convince more entrepreneurs. This year is a disaster, of course, because of the war, not so much because of the regulation, but the regulation doesn't help us. I mean, sometimes if I have a chance to speak to the regulators, if you're thinking about regulating more, just think about regulating less. because my life is complicated enough as an investment banker. My life is complicated enough because we need to match the greed of investors with the greed of issuers and find a match. And then, of course, comply with all the regulations which are imposed to us as intermediary brokers, just to make sure that we've sort of followed the documentation if we want to sell, that we sort of comply with all the regulatory. I mean, I'm funding quite a substantial legal departments, as all investment banks are and are required to do, and that's and the amount of regulation is not decreasing; it keeps increasing almost exponentially, and we're still taking a small margin on currently depressed markets. We survived the COVID downturn. We have the same recovery as you did in Spain in 2021. Entered 22, January, February was good, and now we had the wall again. and so we try to survive on the small deals. The local market still works because there's so much of local money being raised. So far, temporary deposit for high interest rate are waiting to be deployed to the market. So that's we work on the small issues, but the mid issues disappear, and the big issues disappear as well, because if they are happening, they go to the American banks and American stock exchanges. So we are left with sort of local issues and local bond issues. That's what we try to survive and survive to for the next year. We have quite a lot of work, so all the issuers are asking us to work. So we're getting tons of RFPs and we're submitting pitches, and we are mandated for several IPOs. But whether they will happen in the first quarter or not, that's to be seen, because still there is this instability of the prices. And equity issuers don't want to necessarily sell their shares for 30% discount to the market, because they have in their heads the valuations a year ago. And the debt issuers don't want to raise money at 10% interest rates, which is the current rate in the local marketplace. So they kind of keep delaying and delaying the issues, while I'm still running the cost base of the investment bank.
Thank you, Vladimir, for your reflections. And indeed, I think it's quite clear that there are lots of challenges, and these are not easy times. But I would like now to turn to Adam from NASDAQ, because I think it's agreed by everyone. I don't want to offend any other market, but that the Swedish model seems to be the first in class in terms of integration of capital markets, but also how much they are raising capital, their companies, but also how much investors, how many investors are really contributing into the capital market. So, Adam, I would like to ask you, in fact, also from your NASDAQ US perspective, why is Europe lagging behind the US? What, in your opinion, will be like the main points to explain that reality? And what do you think that are measures that will have to be developed in the rest of the European Union to somehow learn from the success that you have in Sweden?
Well, first of all, thanks for allowing me to join this panel, and sorry for not being there. My colleague Arja Retsen is there in Prague, so she will be glad to share more expertise around our markets. Well, of course, your question is a question we're trying to solve years and years and years. So I'm not sure I have the answers in 2 minutes here, but I think from our perspective, we're of course very humbled to have such a great ecosystem that we have from an SME perspective in the Nordics. So far this year, we have listed 60 companies. We've had close to 40 IPOs. 35 on our First North market and 5 on our main market. And that compares to 200 companies last year. And of course, we look at all listings. I think it's important for us not to look at it only from a perspective of IPOs only, but also for, fundamentally how are companies accessing markets. So if companies are now doing reverse takeovers or leveraging the SPAC structure or listing without raising capital, each company accessing the market is equally important. And of course, doing a larger IPO in this very, very volatile market is more complex. And we're seeing that in the US as well. I mean, US is lacking IPO momentum right now. And this is a global issue, not a European issue. I think the fundamental reason why we continue to see smaller mid-size IPOs, which I'm very proud of, is we have been very committed to a growth market. Not only us as an exchange, but our economy has been committed. Our government has supported it with good, clear infrastructure support from ISK, independent saving accounts, good tax structures, etc. Of course, it can always improve, but overall, it's become a very favorable and manageable infrastructure for SMEs and also for retail inclusion. The larger IPOs are the challenge, and I think what we are focusing on is, last year we had 40 companies going to the US from Europe, either primary or dual listing. The year before, it's 20 companies. It's not 20 companies we're talking about here that are the problem. It's fundamentally about how do we create a good infrastructure to support larger IPOs when they come back to market. And it's not only, so from our perspective, it's really about making sure that we have more expertise and more knowledge in terms of being able to assess and take on the risk that a lot of these growth companies mean, because a lot of these growth companies are coming from sectors which are fundamental in a shift that we need to take as a society, whether it's a clean energy shift or whether it's a digitalization shift, etc. And if we're expecting the US to fund this shift, then that becomes a concern. I think from our perspective, at the end of the day, large companies will always have many options. Smaller companies have less options. And we need to make sure that the public markets is accessible and manageable for smaller companies. And smaller companies grow. We have a great example now of a company that listed with us at 150 million euro valuation and is now graduating to the main market from our First North platform at a valuation of roughly 8 billion euros. And last year, they raised roughly 700 million euros on our growth market. These are the success stories that we need to address, because if we don't raise the companies if we don't list the companies at 150 million euros, they will grow elsewhere and they will have other options and they will potentially be acquired. So we need to make the smaller growth market accessible, manageable, in a transparent and clear way, with trust from all sides involved. It's not about reducing complexity in the sense of just making it easy, making it cheaper at zero cost. It's really about making sure that the ecosystem is a trustworthy ecosystem, credible, but then again, we shouldn't be over-regulating it. And there are many pockets of over-regulation which are creating complexity and creating an uncertainty. And when we have more volatile markets like this, then they don't want to take on that uncertainty. And I like the comment about that we should not always be regulating listed companies. It's equally important to regulate unlisted companies, because there are so many options for the unlisted companies today, and we need to make the public environment more attractive. So from my perspective, there was also a comment earlier about that the markets are global and globally accessible by all investors. That's not really true. Because the one issue that you have is that you can attract a certain layer of US investors to support growth companies here in Europe. And Adyen is a great example in Amsterdam. But the reality is that we do not have these $10 billion Oklahoma funds or technology funds in Oklahoma. And they will not invest globally. They will try to convince the companies to list in the US to de-risk that investment. And that's really what we're seeing as a peer pressure, or as a pressure for some of these European companies to access the US. Again, very complex topic. We could spend hours talking about this, but it's great to see that we have a listing act coming out, which hopefully will address many of these, because we need to be focused on investing in growth markets and willing to take on the risk of investing in growth markets, because that risk will be a return of investment for many.
Thank you very much, Adam, for your reflections, because indeed, I mean, as I said at the beginning, this is a very complex topic that it will be much easier if it was just one problem, one solution, but no, there are many angles to it, and indeed, I think you pointed to a very important question. It is how to keep the companies, remaining in our market. So one of the aspects, in fact, that makes me now link to the next idea is on the coverage of the markets, on the companies, coverage of companies. In fact, about this equity research that we saw that unintentionally there has been an impact with the unbundling measures. And I think it's quite important that not only liquid blue chips are looked at with care, but also the SMEs, because precisely these are the ones that, as Álvaro in fact was saying, that are the ones now coming into the market, etc. So, in fact, from the Spanish perspective, how do you see that topic in terms of the equity research going? And I think you have an example also to elaborate from there. So if you can take the floor.
Yeah, thank you. Well, this is one of the obstacles, really, no? It's, well, some of them, we have already talked about them. But one of the obstacles of the growth markets or SME growth markets is their low capacity of giving visibility to SMEs comparing with the larger companies or the companies traded in main markets, no? And one of the solutions should be, or the problem is the lack of equity research coverage for a lot of or most of the companies. Well, talking about figures and talking about Spain, like 4 years ago, more or less 40%, 42% of the small companies traded in Spain, in the main market and in our growth market, were what we call orphan companies. Orphan companies is those companies that they don't have any research coverage at all, no? That was 42% of the small companies traded, listed in Spain. And if we have a look, or if we look only at our BME growth, SME growth market, this percentage is or rises up to 70% of the companies 4 years ago in our SME growth market were orphan companies, that was we call them. So we tackle this issue and we try to find a solution. And what we did is to launch an initiative in collaboration with the Spanish Institute of Financial Analysts. The initiative was called, or the project, well, it's not a project, now it is a reality, it's called Lighthouse. And the aim was to give light, or to put the focus, or try to give some more visibility on the small companies, giving them access, cheap access and easy access to equity research, no, coverage. So a group or a team of analysts in this Spanish analyst was or started to give this coverage, and now they are following and issuing informs or reports, coverage reports for more than 30 companies, 30 small companies, listed companies that were orphan before. And this means that the percentage, 42% now, is 27% of orphan companies. They expect to have more than 40 companies in a year. So at the end of 2023, they will be issuing reports and giving research for more than 40 companies that used to be orphan before, no? So this will reduce the percentage until 27% of the companies in Spain, no? So this is the Lighthouse project. This is just an example on how things can be done in this area of equity research coverage and trying to solve this main obstacle, which is the low capacity of growth markets to give more visibility to SMEs. And also, Adam was saying to give more visibility to this exit. To these companies that can jump from the small company, so from the SME market, growth market, and jump to the main market and grow. And because we have also 2 or 3 big examples in Spain of companies that were included 5-6 years ago in our SME growth market with a 16 million market cap, and then they reached the IBEX 35 with more than 3,000 million market cap. No? So we have also to improve our capacity to give visibility to these companies also.
Yeah, no, absolutely, Álvaro, and I think it's very good to hear about this initiative, Lighthouse, to at least for those that were not familiar with it, because may serve as an inspiration, right, on how also proactive action from private sector can help into getting not only the visibility to companies, but also to the brokers that in fact are the very important intermediaries in this ecosystem. Now, also turning to André and talking about initiatives, Renew Group, your political group in European Parliament, has established a dedicated SME task force recently, and I understand this precisely to look at how SMEs can access to finance, and I will understand that obviously as part of it could be as well how they can benefit from capital markets. So can you maybe elaborate a bit on that task force? What have you analyzed or assessed so far with regards to obstacles, and what is a little bit the timeline of your work there?
Yes, thank you. Indeed, yet another parliamentary platform that we pioneered as a political group, because we obviously have the issue of SMEs in our heart as liberal political group. I think we should be those standing for businesses in the European Parliament. I think the overall idea is actually to put together the members of the European Parliament from our political group that are sitting in different committees. And I think this is linked to the comment that I had earlier on the policy consistency and the coherence. So if we work on a specific piece of legislation, and there's a lot of them that are actually going to many committees horizontally, so that we are actually aware of what various committees are doing, that we can actually put forward the same ideas, the same amendments even, and actually make sure that through the activities in those committees we can help to shape the regulation in a way that that can help or at least harm least. Depends on the point of view, right? It can be less harm or more benefits for SMEs, and I think that's the very idea. We actually have, as we speak, we have a delegation here today in Prague, because there is an SME assembly organized by the European Commission that kicks off tomorrow. So we are the only political group represented as such through our SME task force in Prague today, and actually I hope we already had discussions with the Chamber of Commerce, and we will meet with our stakeholders. I really hope that this can actually also fuel our the work of our task force. Obviously, the idea of actually working on access to finance issue is one of the, let's say, the key areas of interest. We are impatiently waiting for the proposals from the Commission. Hopefully next year, as you mentioned, the Listing Act that may help in this regard. But I think also an issue of corporate insolvency and other issues. And as I mentioned in the first part, definitely the retail investment strategy, because obviously this, in my view, would be definitely this horizontal initiative that would require many involvement of many stakeholders. And I think as our group is actually already working on some of the issues, we managed to conclude the negotiations together with the Czech presidency on European long-term investment funds. I think also an important step forward. Let's see whether this can be an important addition also to development of capital markets. But I think not only those, let's say, concrete proposals, but I think more broader policy initiatives. And I think in this regard, this also sort of, in my view, converge with the plan of the European Commission, but also work on creating and helping to create the investment environment in Europe. We mentioned the issue of financial literacy. I think that is very much important, also from the point of retail investors. But in my view, it's also an important area to cover with regards to entrepreneurs, because actually there's a lot of business owners that are actually very much focused only on one, let's say, source of financing, as we see in Europe. And I think the idea should be also to broaden very much the horizons for entrepreneurs to actually look into other options. And I think these two things should go sort of hand in hand to create, not only to create the investors cultures in Europe, but also sort of to create the demand from the businesses. I'm not saying it's not existing. I think it's more about, you know, broaden it and actually raise awareness in this regard. So I think it's also this combination of legislative but also non-legislative, more like broader European policy actions that should be brought forward, maybe with no immediate impact, but with definitely long-term impact to be seen in this regard.
Thank you, Andre. And indeed, you also mentioned the fact that the SME Week will kick off today, in fact, here in Prague, under the Czech presidency. And we are very pleased, obviously, to also be part as FESE of this. As you were mentioning, your group is here as well. And now I would like to turn to the Commission, because as you also mentioned, Andre, we are all kind of looking forward to see the Listing Act coming. But before moving there, Tanya, I have another question, which is now that you just listened to the debate on the obstacles, did you get the same feedback in your public consultation, the one that you closed in February? And what have been the areas that you had to focus in your impact assessment? Of course, I understand that you may not be able to disclose as much as we would like, but I'm confident that you will be able to kind of give us some of the interesting remarks here.
Sure, Rosa. So I think the fact that probably most of the parties that represented in this panel responded to our public conference in a way is an indication that here we have today a good representative sample of the respondents, and hence it's not surprising that most of the things that have been mentioned by the speakers in today's panel were also reflected in responses. Now, how I would like to start, however, is perhaps with a bit of general statement, or actually the starting point. When we looked at this project, and when we started this project, we looked also and tried to go through as many existing studies and research. And what we've concluded, but also having spoken to many stakeholders, is that the decision to list is a very complex one. There is, and I think Rosa, but also some of the speakers mentioned that it's never as simple as you change the rule, you remove certain rule, or you replace it with another rule, and all of a sudden you have many IPOs in the EU. It's much more complex than that. And I think responses to the public consultation largely reflected this picture. So when we asked the question, do you think that regulation is the biggest obstacle? Some of the respondents indeed said that yes, but many did mention, for example, lack of liquidity on trading venues. The fact that there is insufficient institutional investor demand has been mentioned as one of an important reasons, important factors why companies do not list in Europe. Now, while about 70% of the respondents said that overall the legislative setting was sufficiently well developed to address the issues of investor protection, many did say that perhaps it requires some fine-tuning because it was not deemed as sufficiently well designed to solicit sufficient interest from institutional investors or even retail investors for that matter, or to allow companies to have an unimpeded access to financing. So I think in that respect, the results of the public consultation very much were aligned with what the speakers today mentioned as some of the key reasons. What we also heard during the public consultation is that a lot of the cost, some of the cost is of regulatory nature, or the nature of the type which result due to the need to comply with the regulatory requirements. Many participants did mention the fact that there are lots of fees from intermediaries for example, that represent a substantial fraction of the overall cost related to listing. So many mentioned bank commissions, advisors fees, legal advisors fees, those consultants that and banks, investment banks that help to build the book, to prepare the transaction. So those were mentioned as important cost factors. Now, of course, as the Commission, we unless we want to price regulate, and personally, I'm not a great fan of price regulation. It's very difficult to influence those factors. So we decide to focus on things that we can change, and what we can change, we can adjust legislation. That ultimately we're behind, right? Together with co-legislators, obviously. So this is where we focused our efforts in the Listing Act. So what we are focusing on, and of course I don't want to reveal the details, but a lot of focus is on the primary issuance, on first-time issuances. How do we bring people to the market? How do we create incentives for people to come to the market? And of course, what are the disincentives today for people not to come to the market? So we are looking at the existing prospectus rules, first-time issuance prospectuses, both in regulated markets, but also SME growth markets. We are also critically looking at cases when securities are already admitted to trading, and a lot of information is already available in the public domain. To which extent having a prospectus is relevant, how much of the information can already be relied on, what is the additional information that is not there that would be necessary for investor to form a decision to invest or not to invest. So it's a bit of a balancing act, because what we need is, and I think Rosa, you did mention that, we need to build trust. So we cannot, and somebody did mention, you cannot, I think Adam, maybe you did, deregulate at any cost. This is not the objective, and this can never be the objective of regulators. What we are seeking here is to strike the right balance. The balance between investor protection, and the majority of the stakeholders responding to the public consultation said, okay, current legislation is fit for the objective to ensure adequate investor protection. Now, whether this objective is reached at the lowest possible cost for other stakeholders, this is the question that we asked ourselves. Can we reduce the burden on issues while not impairing investor protection or market integrity? So this is an important consideration that we've considered. We've also looked at the transitioning. When you transition, and some speakers did mention that, what happens when you transition from SME growth market to regulated markets. Of course, the primary consideration for us is to ensure that rules apply to all entities in the same way on the same type of trading venue. So we're not trying to introduce fragmentation in rules for companies of different size that are listed on the same trading venue. So this is still our overarching consideration. We're also looking at governance structures. So about half of the respondents that came back to with our responses to the public consultation said that current lack of flexibility in some member states choose the type of governance structure that would fit the vision of the owner is an issue and is an important factor that sometimes can dissuade a company from listing. So what we are working on is a proposal on multiple voting rights, for example, that you will see as part of the package to be adopted next week. Research has been mentioned. The response to the public consultation showed that what has been done until now, and of course the rules on research have been reviewed as part of the CMU recovery package, CMRP. But what we hear is that perhaps it hasn't been done to sufficient extent. So we are looking into this, and we're looking also into the question of issuer-sponsored research, because I think today issuer-sponsored research is suffering from a bad stigma. And in some cases, perhaps it is justified because, of course, there is a potential conflict of interest. But at the same time, I think there are ways how to ensure that the conflict of interest is being mitigated. So we are looking into ways to mitigate the conflict of interest. So, I mean, these are the elements. We are trying to address the full spectrum. We're trying to look at, pre-IPO environment, IPO environment, and post-IPO environment. So as part of the post-IPO environment, we're also looking into the market abuse rules. And there, the responses to the public consultation were quite clear. There are things that we can do because the regulatory burden of compliance with market abuse rules is fairly high. So we are going to propose some changes there. And ultimately, I think the main perhaps focus of the review is to think a bit outside the box, and to try to also be a bit of a visionary, if I can use this word. It's difficult to be a visionary when you're a regulator. But I think what we need, given also the complexity and the duration of our lawmaking process, we need to anticipate certain developments. And in a way, we cannot afford, to fine-tune each time something comes, into light. We need to put forward something that makes sense and would make sense, today, tomorrow, and several years down the road. So this is the main objective and the emphasis of the proposal.
Thank you very much, Tanya. I must say you gave us much more information than I would have expected. So that has been very generous, because you really looked at it from a holistic approach. So you touched on the multiple voting rights, sponsor research, and then, as you mentioned, the targeted simplifications to the prospectus, to the listing directive, and also the market abuse rules. So we are definitely looking forward to seeing this, as you mentioned, balancing act. Very important to keep trust in the markets and to keep these capital markets growing. So we are running a little bit late, even though we inherited some delay, but still, I think we need to try to wrap up. So Tanya, you in fact made an excellent transition into the last round, which was precisely to brainstorm a little bit on the Listing Act. So you said it is going to be the package, if everything goes according to a schedule, will be published on the 7th of December. It's very soon. So I would like now to ask Adam from NASDAQ, what will be your reactions to what Tanya has been outlining, and what do you think should be the priorities to tackle in the Listing Act? So please, well, Adam, I will ask you, sorry, to be brief because we are right now late. Thank you.
I'll be very brief. So first of all, very inspiring to hear. Looking forward to see what the Listing Act contains. I think very interesting. If you look at MAR, for example, it's interpreted in 27 different ways across Europe. I think there is an opportunity to enforce how it should be interpreted. We see that in the Nordics, we see 3, 4, or 5 different ways of interpretation. That makes it unclear for the same advisors and investors and issuers to handle and manage. I think another aspect which is very interesting is the free float concept. Why are we the only alternative that is forcing companies to sell 25% if they have to access capital? We've looked at research in the US, free float is not a requirement. And we see that many companies with very little free float actually have good liquidity. So why are we still imposing this? Again, the measures and the issues it's not one single one. It's the holistic view and the cooperation with Tanya and the regulators locally on an EU level. We look forward to working with them, and we're very excited about what we heard and the potential ahead. So we remain at the regulator's disposal to discuss this further.
Thank you, Adam. Briefly, Álvaro, Vladimir, any comments?
For my side, from the side of the stock exchange or the SME growth markets, we cannot. After hearing Tanya, we cannot wait until next week to come because and have a look at that listing act. Because I remember last year we were commissioned. Or we were part of a group of experts that was commissioned by the European Commission to make a report on SMEs, and we find some obstacles on SMEs to access to growth markets or to public markets, and most of them we've talked about them today. The cost to go public and to stay listed, for example, or the lack of visibility of the companies, the lack of liquidity, lack of research, all these things that we've talked today and that Tanya and Andre were talking about and trying to solve. No? So the title of this report was making listing cool again. So I think that's what we have to do, to make listing cool again. And I think it's the best moment for doing it.
Very good. I very much agree with that formulation. Vladimir?
It was interesting to hear the comment about research. Let me share. I was building equity research in Central Eastern Europe. I was the head of research of Wood & Company in 95 till about 2008. And then actually Wood & Company is still running a team of about 35 analysts, and we provide research for about 200 companies. And of course, since the unbundling, which happened in 2011, 12, 13, we're actually struggling how to pay for it. So that was wonderfully regulated. Of course, before that, the research was paid through bundled execution. As you remember, then we have to go through unbundling. We managed to convince some of our clients to pay for research. Since then, the research is loss-making. We keep cross-subsidizing it. And we, of course, struggle how to keep quality people in the research. And now and Europe is crying, why do we don't have research coverage? And why don't we have quality analysts? Because that's over-regulated. It's purely over-regulated. And I'm the last man standing to actually still providing the service of society. We're not making any money out of research. We're not able to cross-subsidize it. We are constantly being accused and have to demonstrate how we are separated from the issuers, how we're not getting paid from anywhere, how we have all avoided all the conflicts of interest, and we are a private-owned company. Of course, in the first instance, that was used by an American banks, JP Morgan specifically, because they provided all their research for 10,000 euros across all our markets in order to eliminate players like us from the marketplace, and many others, and the big banks cross-subsidizing it. They either sell it for free or for nothing. So we had to sort of very, very hard fight to keep quality analysts. And of course, we can't pay top people in the industry, which are protected, or actually their biggest at stake is the reputation of the firm and the reputation of their own. That's why they putting their recommendations. And since then, we keep sort of trying our best to keep the good people in it. I believe our research quality is still very high given the circumstances. But it's actually constantly painful discussion every year, and why we lost money in research. Are we going to do that? Stock exchanges are coming to us, okay, can we pay for it a little bit and give you petty cash of 5,000 euros per year per company? I'm just like, I'm not going to pay the analyst from that anyway. I mean, this is not helping me, guys. Yeah. And issuers, now they're coming back and they try to pay us a little bit, but it's a huge uphill battle since the bundling. So think about the regulation, because you've regulated protecting marketplace by sort of missed research so much that you've eliminated the good research entirely from Europe. And now we're getting the consequences on the marketplace.
Thank you, Vladimir, for that observation, but let's hope that this is something that will be tackled. I think has been clearly mentioned as one of the main obstacles. Now, wrapping up, getting into towards the end of this very interesting discussion, I wanted to briefly touch on the fragmentation that we are also facing in Europe when it comes to cross-border investments. So we have company law, corporate law, insolvency law, withholding tax. All this is fragmented. We do not have a 28th regime yet, but very briefly, Andre, I know there is a lot of information here, but how do you see kind of the parliament moving forward precisely to contribute, that we really improve the situation as we have today?
Yeah, indeed, as you said, very difficult questions, obviously. But I mean, we already heard, and there will be some initiatives in terms of market integration, and I think that's a good step forward. Obviously, in terms of how the European and national law are structured, it would be very hard to end up with a debate that we will have more harmonized civil law, corporate law, et cetera. But I think the key, I'm not really sure that. I mean, in theory, the concept of 28 regime would be obviously perfect, or whatever the number would be at that time with other members joining the European Union. But I think politically, practically, it would be very hard to achieve that in foreseeable amount of time. But I think key there is actually to find those areas where the market integration can be achieved. To look at how we can harmonize. We will have also proposals from the Commission coming up on, for instance, on tax issues. I think that could be a good opportunity actually to come and look into areas where the tax issues are actually still fragmented and creating obstacles. But I think on top of that, we still see there's a lot of fragmentation in the single market as such. We haven't seen the completion, and I think we will have the celebration of 30 years of single market, but the single market is far from complete, especially in terms of the services area, the provision of services area. And I think this is particular a key point where we should look into, where we deal with not only the proposals that will come up, but also I think with the next upcoming policy initiatives to look at concrete issues where the cross-border action is actually providing a lot of obstacles, and whether there is something that we can do about it, either by providing more liberty, by possibility of passporting, by coming together with more harmonized rules on specific issues. I think there is a way to do it. I think it's really about the mindset that we have, and focusing on the key issues that are there identified as obstacles when we reach cross-border.
Thank you very much, Andre. I think then we can conclude this panel with what seems like a good summary of all the aspects to consider, but also I think we can finish it in a much more positive note, definitely having listened to Tania Panova from the European Commission on what we are expecting for next week. So of course we will look at it carefully. We will try to contribute to the debate as we have always been doing, and obviously we wish all the best to the incoming Swedish presidency and also the people that will be involved in the Econ Committee, because as the Commission mentioned, now is also collaboration from co-legislators to get this work done. Thank you very much for this lively discussion, and thank you very much to all of you for your attention. Now, Luc van Steenskiste, Chair of European Issuers, will give us the closing remarks of this FESE conference. Thank you.